has been declining the last 20-25 years. Last year, they grew 7.3%, which was the lowest in 14 years. Philippine economy last year grew by 6.7, 6.8%, but this year, which is a run-up to the Philippine national election in 2016, we expect a lot of impetus from the government in terms of additional spending, more consumption of the Philippine economy, and that's put us in a perfect positive trajectory to reach at least 7 to 7.5% in terms of economic growth in 2015. So this year is very significant for us because this may be the year where we will eventually overtake the growth rate of China. The fact that Philippines is in the ASEAN, which is a potent, powerful economic regional bloc, is also an additional impetus for further growth in the Philippine economy. ASEAN provides a compelling investment proposition with a population of more than 600 million and a nominal GDP on a combined basis of $2.4 trillion US dollars. During the height of the global financial crisis, what insulated to a large extent the ASEAN from the slowdown in the global economic situation both in Europe and US was the fact that the intra-trade alone in ASEAN accounted for more than $2.2 trillion. So ASEAN as it is can subsist with exports, imports, inter-trade, exchange of commerce and business amongst the member countries of the ASEAN, considering that the economic bloc in itself is powerful, having a combined GDP of $2.4 trillion. This is 2013, and this was even higher in 2014. On a combined economic bloc basis, ASEAN is the 7th largest economy in the world, growing at a fast-paced average of 5.1% annually. ASEAN is projected to grow into the world's 4th largest economy by 2030. As mentioned, the discussion of Hansi, that was a perfect prelude to my talk this morning. He talked about very active capital markets, both in ECM, equity capital market, DCM, debt capital markets, and loans. And the fact that the ASEAN market and economy is integrating at this point is an added bonus to us because this will allow a lot of Philippine corporations to access capital, not just in the Philippine context, but also in the ASEAN context by way of cross-border issuances and cross-border fundraising transactions. The likes of San Miguel, Pure Foods, the banks, Philippine banks can access excess capital in the region in the same manner that the Salim Group of Indonesia may be able to access the Philippine capital market, Mondinisan of Indonesia, CIMB of Malaysia, Capital Land of Singapore. All of them eventually can partake of cross-border issuances, accessing the total resources of the ASEAN as an economic regional bloc. Philippine companies are growing in terms of size, heft, and their funding requirement is increasing by the day, so to speak. Many of our Philippine conglomerates are involved in massive infrastructure projects. They are needing huge, colossal funding access in order to support their business diversification and expansion. So opening up the ASEAN as a total platform for financial access is indeed going to be advantageous not just for the Philippine companies but also for other ASEAN companies who may want to access Philippine capital market. One of the key advantages of the Philippine banking system is that it boasts of an FCD, or foreign currency deposit, total value of about $27 billion. This is generated through the years from remittances from OFWs, savings of the economy, earnings from BPO call centers. So this is a magnet or an attractive investment proposition from other ASEAN companies to access the local capital market when they need the dollar for their business expansion and diversification. ASEAN capital markets in terms of foreign direct net flows in US trillion dollars, you will see that in the right-hand bar chart. ASEAN accounts for 16% of foreign direct inflows in developing economies. In 2013, the region exceeded China's FDI inflows. China is the red bar chart. The green bar chart is ASEAN. Beginning 2011, moving to 2013, ASEAN as a collective regional economic bloc has attracted more foreign direct investments vis-a-vis China. EU is the biggest FDI contributor in the region. However, intra-ASEAN FDI flows have significantly increased in the last 5 years and is now the third largest contributor at US $21 billion. Increasing intra-ASEAN FDI flows is important as it boosts region's self-financing capability and defends it from vulnerability from external shocks. FDIs are catalysts for development, and the more development a country pursues by way of infra spending, improving its facilities, breeds or speeds up more development, so it becomes a virtuous cycle that attracts more FDI in the long run. ASEAN is also a region of prodigious savers. On the average savings rate range from 30 to 60% of GDP. This means that there are available resources to meet the financing requirements for massive infrastructure projects and developments to support the region's surging population and economic growth. The Philippines alone saves something like 1 trillion peso annually. It is generated primarily from OFW, again, if I may stress it, BPO call center, and household savings on a collective basis has dramatically boosted the country's savings rate through the years. This is ASEAN capital markets, the snapshot. The combined market cap of ASEAN 6 equity markets, Indonesia, Malaysia, Thailand, Singapore, Philippines, and Vietnam, was $2.4 trillion in 2014, growing at a CAGR of 14% annually in the last decade. It has more than 3,300 listed companies. Likewise, local currency debt outstanding in the region has appreciably expanded by 12% annually to US $1.1 trillion by the end of 2014. It is important to note that our neighbor Malaysia is now the third largest bond market in the world, and the world's biggest market for Sukuk. I was just talking to Jim Crisol of PBS a week back, and he informed me that the outstanding bond issuances in the Philippines has reached already almost $1 trillion peso. To compare that with outstanding government securities in the market, which is $3 trillion, it is very impressive, considering that the outstanding bond issues is now 1/3 of the GS market, which is more matured and was introduced way back in the 70s, way ahead of the development of the Philippine bond market. So we are effectively contributing also to the further expansion of the ASEAN bond market issuances and deepening. And more importantly, when ultimately the cross-border transactions are finally implemented, I'm sure Philippine corporate issuers will be one of the most active participants in this space. Just a next slide, please. Just an important case study. In 2009, ADB, Asian Development Bank, issued the first ever ADB peso bonds. This is a laudable program pursued by ADB precisely to encourage local carrying issuances by a multilateral institution in the ASEAN region. After that peso bond issued by ADB, they decided to issue ringgit ADB bond in Malaysia and other local currencies in the ASEAN region. This paved the way, or probably laid the foundation for cross-border issuances, no? that will happen eventually when the ASEAN capital market is fully integrated. Some of the names that you are seeing in the chart at this point, CIMB Bank, are some of the leading regional players that are parlaying the pan-ASEAN cross-issuances. They are permanently being referred to as pan-ASEAN active capital market players. DBS of Singapore, Maybank of Malaysia, they are very active in supporting their local corporates access the ASEAN capital market as a whole. Relating this to the recent foreign banking liberalization that the Banco Central ng Pilipinas has implemented, we are expecting that in this second wave of foreign banking liberalization, what we will see would be the entry of regional banking players rather than the global banking players that entered in 1994, which was the first wave of Philippine banking liberalization. In 1994, you've seen the likes of CP, Deutsche, HSBC getting into the Philippine banking market, but the flavor of this new round or new wave of foreign banking liberalization is that we expect it to be dominated this time by active and big regional players, the likes of CIMB, DBS, Maybank. In fact, Banco Central ng Pilipinas has indicated that there were 11 regional banks that have indicated already interest to get into the Philippine banking business. 4 Korean banks, 3 Taiwanese banks, 2 Japanese banks. In fact, our partner, SMBC, Sumitomo Mitsui Bank, was the first bank to have access a banking license using this 2014 Foreign Banking Liberalization Act by the Banco Central ng Pilipinas, and they will open their doors for business in September this year. And then moving into equity market integration, this was presented comprehensively by Hans. We are happy to know that 3 countries have agreed already to integrate electronically in some form of contacts and IT connections. These are SGX of Singapore, Bursa Malaysia of Malaysia, and the Stock Exchange of Thailand. We are feeling so much hope that Philippines eventually will join the ranks of these exchanges, so that it will practically open up access by local Philippine investors to be able to access the equity markets of Singapore, Malaysia, and Thailand. We heard that Indonesia, together with the Philippines, probably would be the next 2 countries that will be able to join these original 3 exchanges that have been ready to technically merge, so that intra-trade of equity trading between these 3 exchanges can already begin. The road to ASEAN economic integration would not be very easy, and it's not a straight line. I remember last year there were a lot of conferences talking about ASEAN capital market integration, both in the WEF forum, the ADB Manila Summit, and it's a buzzword. They said that by 2015, ASEAN capital market integration will happen. It is already 2015, first quarter of 2015 in fact. And as we speak, everything is still evolving. Things are still WIP, work in progress. As we speak, there are segments of the general plan to actually integrate the capital market that's happening already in the field of trade business. Most of the tariffs of member ASEAN countries have been reduced already. So in that space, ASEAN economic integration is happening already as we speak. but in the field of bond market, equity trading, and banking, a lot of things still to be done to fully realize the plan to fully integrate financial system, capital markets, and including the banking system of the ASEAN as a whole. The number one constraint that we practitioners have identified in fully integrating our capital markets financial system with the rest of the ASEAN is that if you will look at Singapore, Malaysia, Thailand, Indonesia, Philippines, at least the first 5 founding members of the ASEAN, very noticeable there is the very different levels of capital markets development. For example, Singapore is way ahead of all of us. Malaysia, Thailand, Indonesia, and Philippines in that order. Imagine if you will look at the next 5 members of the ASEAN, the likes of Myanmar, Bangladesh, Sri Lanka, where the capital markets are still underdeveloped. That poses a lot of difficulties and challenges on how you can actually integrate all these markets given the different levels of sophistication and level of development of the different capital markets. The other challenge that we are seeing is there are institutional differences reflected by divergent domestic policies on account of liberalization, improving protection for investors, and conflicting stock structures. Philippine context, our tax structures is indexed to a particular instrument that you're buying or trading. If you're buying a government security, you're subject to 20%. If you're issuing a corporate note, it is not subject to 20%. If you're issuing preferred share, it's subject to 10%. If you're an institutional buyer of preferred shares, you're exempt from the tax. If you're a retail investor buying preferred shares, you're taxed 10%. So very complicated. That's why I think the lawyers and accountants are making a lot of money in the Philippines. So when they're advising and guiding foreign investors who are very interested in buying Philippine financial instruments. So all of these conflicting structures has to be harmonized with the rest of the region. So that's a very tall challenge that's facing on the policymakers in ASEAN capital market integration. And as I've said, varying market sizes, different range of products and services, and then primordially reconciliation of national interest and regional common goals and benefits as espoused by different the government and policy makers. Moving forward, the general intention really is to create an enabling environment for regional integration through harmonization and mutual recognition of a unified platform and framework. Number 2, creating the market infrastructure and regionally focused products and intermediaries by creating ASEAN Exchange Alliance and governance framework, promoting new products and building ASEAN as an asset class, and strengthening the bond market, and strengthening the implementation process by aligning capital market development plan to support regional integration and reinforcing ASEAN working process. What I have discussed so far are what we call as the hardware or the structure for ASEAN market and capital market integration. What we are mixing at this point is the soft component, which is the people, practice, and profession. By way of advertisement and also apprising this body, FINEX, which is an industry association comprised of financial executives and finance people practitioners in the country, proposed to Asian Development Bank the creation of an institute, ASEAN FINEX Institute, that will take care of accrediting, harmonizing trade practices, accreditation, licensing, so that eventually people of different trades, for example, an equity broker, a bond trader, an investment banker, a commercial banker can now practice his or her a set of skills, trade, and proficiency across the ASEAN region. So that in addition to opening up the capital market for financial transactions on a cross-border basis, people, professionals can also eventually move around in the ASEAN region, practicing their set of skills by way of a unified accreditation and licensing process. So that initiative is gaining ground. ADB have seen that that's an important component that they're missing out at this point. It will be prioritized in their next meeting, so that the institute will be created in order to facilitate practice and profession across ASEAN. We're just making a very huge or important exemption from that practice of trade or profession in the region. We are barring politicians from moving around the ASEAN region and doing their politicking there, because they will spell trouble and disaster for the ASEAN region. On that note, I'd like to greet you. Good morning, and enjoy the rest of the day. This is a very interesting program that was arranged for us by Richard, and I truly believe that all of us will benefit from increasing our knowledge about many things, including the ASEAN integration. Thank you.